Okay, it is 2 minutes past the scheduled start time. So I think we've given enough time for people to join. And for those of you who joined early and on time, really appreciate you taking time out of your day to pencil this webinar into your busy schedules. My name is Jabez Tan. I'm the head of research at Structure Research. We are a industry-focused market research firm that covers the data center and hyperscale cloud infrastructure space, as well as the ecosystem surrounding it. So think of other segments like interconnection, edge, as part, and managed hosting and managed services as part of our core coverage areas. This is webinar, I think, number 3 of our webinar series. We started off with a Singapore market webinar, followed by a Paris and Marseille market webinar that was done by our analyst Ainsley Woods. Those 2 webinars are available on our YouTube channel. So if you do a search for Structure Research on YouTube, you should be able to find the video. So would really appreciate you guys liking and subscribing to those videos. Really helps us out a lot. Before we begin on the current webinar topic, which is focusing on the Japan data center market, and in particular, the Tokyo and Osaka market. Japan is a big country, many sub-markets within Japan, but we would just want to focus on the 2 core markets within Japan, and that's Tokyo and Osaka. But before we start, we just really want to give a good shout out and thanks to the Digital Realty team for sponsoring this webinar. They have a pretty sizable data center footprint in both Tokyo and Osaka, so it made perfect sense that we partnered with them for this webinar. So again, really thank you to Digital Realty for being the sponsor for this webinar. So let's start by giving you a quick rundown of what we're going to be covering in this webinar presentation. We're going to look at market size and projections, 5-year projections for the Tokyo and Osaka market. We're looking at the data center maps of each of those markets and how the data center capacity is being distributed currently. We'll also look at where all the cloud on-ramps are centralized and located, and give you a sense for who are the main players in each of these markets, who are the top market leaders in terms of capacity. We'll also dive deeper into the hyperscale cloud capacity distribution and how we project that to evolve over the next 5 years. And then we'll wrap it up with some key themes about key themes and takeaways for the Japan market. And then we'll open it up towards the end for Q&A. So this shouldn't take too long. It's not meant to be an exhaustive webinar on the Japan market, but it's meant to give you some insights and some details on what we've been doing in terms of our coverage of the Japan market. So without further ado, let's just dive in to the main slide deck. For those of you who have attended our Singapore webinar, there's going to be a little bit of repetition here just to give people who have not attended our previous webinar some context about the overall market and the Asia Pacific region in particular. So these are our market share numbers that we publish on an annual basis. And as you can see here, we're very bullish on the growth trajectory of the Asia Pacific region. Currently, at the end of 2019, you see that North America generated just over $17 billion in market revenue for colocation services. So that's about 40% of the market. Asia Pacific region is not far behind at 36%, and in Europe, Middle East, and Africa at 23%. By 2021, the Asia Pacific region will surpass North America in terms of revenue market size. And as you can see here, we project 5 years ahead. We expect that by 2024, the Asia Pacific region will take up 40% of the global data center colocation market. So really a changing of the guard, if you will, in terms of the upcoming leaders, in terms of where are the future growth areas in the world for data center capacity. So taking another step back and looking at it from a country perspective, and this is not an exhaustive list of all the countries in APAC, but just wanted to highlight some of the key markets and the key countries that will be we focused on as a research firm. As you can see, Japan is the second largest data center country in the Asia Pacific region, followed by other very familiar markets like Australia, Singapore, Hong Kong, and at the bottom 3 you have India, South Korea, and Indonesia, which I think you'll see most of the growth coming from those 3 markets in the next 5 years. I think India could easily double or reach the 500+ megawatt mark in the next 5 years. South Korea continues to open up as a data center market, and especially Indonesia and Jakarta in particular, is expected to see a lot of new data center capacity develop in the next 5 years. So, a combination of core tier 1 markets and some emerging tier 2 markets that will likely look like tier 1 markets moving forward. And then looking at it from a per market standpoint, so even if you take a step back and excluding the mainland Chinese markets, Tokyo is the largest data center market outside of mainland China for the Asia Pacific region, followed by markets like Singapore, Hong Kong, Sydney. So you see even a secondary market like Osaka, even on this top tier list. And I think Osaka will continue to look or start to look like a tier 1 market in the next few years. So a lot of hyperscale growth coming to both Tokyo and Osaka markets moving forward. So this is the Tokyo colocation market size that we've measured and projected in terms of US dollar millions. So in 2020, we expect that the Tokyo data center colocation market will generate just over $1.9 billion in revenue. And as you can see, the bulk of this is still coming from retail colocation in that dark red. But if you look at the very bottom pie charts where we have the split between retail versus hyperscale, hyperscale represents currently just under 30% of the revenue generated in Tokyo, but that share is going to be increasing pretty rapidly over time. And by 2025, it'll be 43% of the Tokyo market. So really outpacing retail growth. So 5-year CAGR for retail colocation at 5%, whereas hyperscale will be 20% moving forward. And how we got to these numbers is we look at this market from an asset level perspective. So looking at every single data center asset, measuring their capacity, their occupancy rates, pricing, and then traveling to these markets and speaking and meeting with the management teams of the key providers that are participating in this market is how we've gathered our market data for both Tokyo and Osaka. So I've laid this out in the Singapore webinar, but wanted to reiterate that we're starting to look at and revisit our methodology for tracking and measuring data center capacity. I think this is probably the best way to do it, given how much growth is happening. And so just looking at the operational data center or currently built out data center capacity doesn't give you a true picture of the runway and the upside and the growth potential of these markets. So we've broken out into 4 different tiers of measuring capacity. One is what's currently built out. The dark red tier is what's contracted out of the currently built out capacity. And it can also, contracted capacity can also include pre-lease capacity. So even though capacity that's not built out but under development will still fall under the contracted capacity section. And then we have this other metric we call the max build out capacity, which is what is the total capacity if existing data center sites were completely built out. So let's say there's a 10 megawatt data center, but only 5 megawatts is built out, currently built out. We'll capture that additional remaining 5 megawatts in this max build out capacity section. And then moving on to total capacity, this includes everything else before that, as well as future land banks and sites currently under development. So this is, we think this is the best way to look at the market and give you a really accurate picture moving forward. I think another layer of methodology we might add to this tracking is our projections of future total capacity moving forward, because obviously I don't think that the Tokyo market will stay at 1.3 gigawatts for the next 5 years in terms of total capacity. I highly am certain that there will be more announced new builds and land banks and sites under development that will push that total capacity number moving forward. So I think we're going to add our own projections and our own predictions of how that total capacity will change in future updates. So stay tuned for that. So Osaka is smaller than Tokyo. So right now, Osaka is roughly 1/5 the size of Tokyo. As you can see, Tokyo is 4.5 times larger than Osaka as of 2020. So Osaka generating just over $400 million in revenue for colocation space. And we project that to grow at an 18% CAGR. So as you can see, that hyperscale is really outpacing retail even more in a more pronounced manner in Osaka, just because of a smaller base of retail colocation capacity in that market. And so by 2025, the Osaka market will go from 4.5 times smaller than Tokyo to only 3 times smaller than Tokyo. So really a testament to that market and the growth potential moving forward. So looking at Osaka, the market capacity numbers. Again, I've explained the methodology, and again, like I said, this is conservative estimates for the Osaka market, and we think that the Osaka market will likely outperform these current projections, as they'll definitely be more than north of 400 megawatts of total capacity as we approach the 2023 to 2025 timeframe. So I want to move on to data center distribution for both of these markets. As you can see, for Tokyo on the left-hand side, most of the data centers are concentrated in the central Tokyo area. So that's, markets like Otemachi, Toyosu, Shohama are districts within the central Tokyo region that have housed a good number of data centers for central Tokyo. I think what you'll see is on the East Tokyo area, currently 7 data centers, but more and more new hyperscale builds will come out from the Inzai area, which is located in East Tokyo. And I think you'll also see some more additional builds in the West Tokyo region as well, from markets like Fuchu, Mitaka, Tama, Nishi Tokyo. I think there's also some interest in the South Tokyo region in markets like Kawasaki, Yokohama, also points of interest, given that the Haneda Airport is in that southern Tokyo area. So I think watch for that region as well moving forward. In the Osaka region, as you can see, most of the data centers are congregated in the central Osaka area, similar dynamic to Tokyo. But I think, it's for those that know Osaka, most of the hyperscale development is happening in that North Osaka data center cluster. So in the Ibaraki, Saito Nishi part of Osaka is where we're seeing a lot of new development taking place. Kobe is not traditionally considered as part of Osaka, but given its close proximity to the kind of greater Osaka market, we think it's worth including that area, that cluster in the analysis for Osaka. And then you have smaller clusters popping up on the east side of Osaka, as well as in Kyoto, where you have some older data centers as of now. And then from a capacity standpoint, when we look at critical IT load capacity, it tells a very similar story to data center concentration as well. Most of the capacity in Tokyo centered around the central Tokyo area, but I think you'll see East Tokyo really start to catch up and start to outperform other regions in Tokyo. Same thing with North Osaka for the Osaka region moving forward. So looking at where the cloud on-ramps are located in Tokyo, because this is, I think, very important as we're shifting from a dynamic from carrier neutrality into cloud neutrality. And so having a cloud neutral data center with multiple clouds located on site and the customer being able to access these cloud on-ramps and provision private connections to public cloud platforms, I think is going to be the key moving forward. So I wanted to give you guys a picture of how that looks like in Tokyo. As you can see, the 2 most interconnected data center assets in Tokyo are owned by Equinix and at Tokyo. So Equinix TY2 and TY4, very dense ecosystem assets. At Tokyo also has a very well interconnected data center campus in the Toyosu area. And then for Osaka, it's only Equinix that's really commanding most of the cloud on-ramps in the Osaka area. So I think you'll see more and more cloud on-ramps start to come online from Azure, from Microsoft, and from Alibaba and Oracle moving forward. And I think you'll see other Chinese clouds like Tencent and Huawei potentially expanding into Japan as well with their on-ramps. And then quickly looking at the market share leaders in the Tokyo area. As you can see, at Tokyo, the top player right now in terms of currently built out space, but on the right-hand side is the total capacity for, again, referring to our definition of total capacity, that is if all the land banks, all the sites under development, and all the existing data centers will be fully built out. I think that paints a better picture of what the future runway and the future market leaders would look like in the Tokyo market. So as you can see, MC Digital Realty is currently the market leader for total capacity, followed by Equinix, and then domestic companies like at Tokyo, NTT, and KDDI, also very meaningful players there. Osaka, similar story. If you look at the total capacity compared to currently built out capacity, MC Digital Realty is, really far ahead in terms of market share. And just as a caveat, these numbers do not include the recent Equinix hyperscale build announcements that they've released in April. This report was published in February, so a little bit of a lag time between the report publishing in our webinar, but wanted to make you guys aware of that to give you a more accurate picture of the numbers here. And I think this is a really interesting a chart that we've kind of put together. One of my favorite charts is looking at the hyperscale capacity projections in Tokyo for 2020 versus 2025. As you can see, we're pretty bullish on the hyperscale deployments moving forward. And I think even looking at 2025, I still believe this is a pretty conservative number for Tokyo. I think it could be a lot higher into the 600, maybe even hitting 600 megawatts of total hyperscale capacity. As you can see right now, Tokyo has, it's predominantly a leasing dynamic. One hyperscaler has built their own data center in the Tokyo market. And in our full Japan report, we break down which hyperscaler has how much capacity in Tokyo and Osaka, and then what their market share is like in terms of both self-build and co-location capacity. So I think moving forward, the key takeaway is that there'll be more self-builds coming from hyperscale providers moving forward, similar to what you're seeing for the Singapore market. And I think why we're so bullish on Tokyo as a hyperscale destination. If you look at Singapore right now, Singapore has around 370 megawatts of total hyperscale capacity as of 2020. Compare this to just under 150 megawatts for the Tokyo market, and I think there's a lot of runway for Tokyo moving forward in the next 5 years to really catch up to Singapore. Given that, and I'll go through some of the reasons why we're so bullish later on. Osaka market, slightly different dynamic. Again, smaller hyperscale capacity, but again, we think these numbers are pretty conservative for 2025. We still think that data center operators would primarily lease from co-location providers for their capacity requirements in the Osaka market. One thing of note is we define self-build capacity also as if, let's say, a land developer were to build a data center and do a triple net lease with a hyperscale cloud provider, that would count as a self-build in our definition. So if that were the case, which I could definitely see that happening, that would shift the percentage to more self-build moving forward. But as of now, I think you'll see the hyperscale cloud providers primarily leasing from co-location providers in the Osaka market moving forward, and a more even distribution as the other hyperscale cloud providers catch up in terms of market share. So let's go through some of the key themes for Tokyo and Osaka before we wrap up with some Q&A. I think I made it pretty clear that we're very bullish on the hyperscale cloud growth in both Tokyo and Osaka, and we expect that to accelerate over the next 5 years. And really it's because, if you look at Japan as a country and as an economy, third largest GDP in the world, and a really large domestic market, along with the Tokyo market being a strategic gateway for submarine cables coming from the US West Coast to access other strategic markets across the Asia Pacific region. So it's not just a local market, but also a hub and a gateway for cloud companies and enterprises to serve other parts of Asia as well. I think the absence of a local Japanese cloud provider makes it a really interesting dynamic where both Western clouds and Chinese hyperscale cloud providers will be competing heavily for market share in the Japanese market. And I think that would really help to accelerate the growth there. I think the Olympics coming up also definitely helps the growth profile of both markets. I think given how much bigger these Western hyperscale cloud providers are, we expect the Western hyperscale cloud deployments like from AWS, Microsoft, and Google and Oracle to outpace the Chinese hyperscale cloud deployments in Tokyo and Osaka. So not a surprise there. And again, I mentioned earlier how we're pretty certain of Osaka reaching a tier 1 market status within the next 5 years, given how much hyperscale capacity or how much hyperscale demand is entering the Osaka market. So Tokyo is a very high upside market, but that doesn't come with its fair share of challenges and barriers to entry. There's currently a power constraint dynamic in Tokyo where because of the huge amount of demand for large hyperscale builds, especially in the Inzai area, that has caused somewhat of a backlog in terms of local utility providers like TEPCO being able to provision enough substation capacity and power infrastructure capacity to really satisfy the new builds coming online in Inzai. So I think that would kind of keep the market somewhat in check from a supply demand standpoint, so it won't have a huge oversupply imbalance at any given point. Japan having low population growth rates relative to the rest of Asia Pacific, and the current labor shortage that we're seeing in that market is projected to continue to keep construction costs relatively high compared to other Asia Pacific markets. And so I think given how dense of a metro the Tokyo area is, I think you continue to see both power and land constraints in terms of identifying enough land to build these hyperscale sites. So I think you'll see more of these builds being pushed further out of the downtown core of Tokyo into these other regions in East and West Tokyo and South Tokyo, like I described earlier in the presentation. So last slide before we make it to Q&A. I know I'm running a little bit past 20 minutes, but I wanted to wrap up with something that shouldn't probably shock a lot of you. So with a very fast growing market like Tokyo, there's bound to be more new market entrants incoming. There's a lot of capital that's targeting the Asia Pacific data center opportunity. So I think a lot of the new builds will be centered around the East and West Tokyo area, primarily focused on targeting large footprint hyperscale deals. But that's not to say that the retail colocation market is dead as well. There's still a niche, and there's still demand for interconnection-oriented retail colocation. So I think you continue to see companies like At Tokyo and Equinix start to continue to do, and NTT even, and KDDI continue to do well in terms of their retail colo businesses as they take advantage of their ecosystem-rich assets in the downtown Tokyo area. I think it's also really interesting that a new market entrant called Digital Edge is choosing Japan as their initial destination to build their, quote unquote, Equinix 2.0 platform moving forward. So they started with 2 sites, one in Osaka, one in Tokyo. And I think it's really telling how they chose the Japan market as the first market to deploy in for that. So while most people or most companies are targeting the hyperscale opportunity, it's a refreshing thing to see that, the retail colocation space still has market entrants coming in as well. So I'll stop there and open the webinar for some Q&A. I'll pop into and look at some of the questions that you guys have posted. Again, this webinar is a sort of a tip of the iceberg of the much larger report that we've produced. So I think it's about 130, 140 pages of granular, in-depth market analysis on both Tokyo and Osaka that was published earlier this year. So if you're interested in the report or want more details or want to download a free executive summary version, you can go to our website, structureresearch.net/reports, and then you should be able to find the Japan report there. So really appreciate your support. Again, wanted to really thank the Digital Realty team for sponsoring this webinar. And then now let me just open the Q&A section to answer some questions. All right. Okay, so all right, some comments here. Appreciate the kind comments. I had a question about, for Asia Pacific, do you have a breakdown between Japan, Greater China, and ASEAN? The answer is yes. We do have a global data center colocation report that looks at data center capacity and 5-year projections on a per country level and a per market level. So if you're interested in that, you can find the executive summary again on our website, and you can download a free version, complimentary version to take a look at the breakdowns that we have. Another question coming in: do you see growth in edge data centers in Tokyo or Osaka? That's a really good question. I think that for both Tokyo and Osaka in particular, I think it also depends on what you define as an edge data center. So the term edge has different meanings to different people, and really edge just means companies that need to get closer and closer to their end user. So instead of serving Tokyo from Hokkaido or Kyushu or some other farther away market, you want capacity in as close to the Tokyo central CBD area as possible to serve the end users in that market. So I think Tokyo in itself will be both a core and an edge market. So the way I think about edge data centers is that you'll have smaller footprint data centers. So instead of the 20, 30, 40 megawatt sites that you're seeing being deployed in Tokyo and Osaka, what you'll see is in smaller towns across Japan, like Hokkaido, like Kyushu, and even like in Kyoto and other smaller areas across Japan, you'll see a greater need for these edge data centers that can take compute capacity, storage capacity, content caching to closer and closer to the end user. So I think as applications get more and more sophisticated and more complex, whether it be video streaming or online gaming, that would, I think, be key drivers for edge data centers in the Tokyo and Osaka market, the greater Japan market, with the core markets continuing to be Tokyo and Osaka. Okay, so I think those are the questions I've gotten. I don't see any more questions for now. I mean, if you have any further questions that you didn't want to type here, feel free to drop me an email at jt@structureresearch.net. Again, if you guys want to see the on-demand replay and share that with your colleagues and friends, feel free to subscribe to our YouTube channel. We'll post the on-demand replay of this webinar, I'm guessing in a day or so, so please bear with us. But for those who have stuck to the end, really appreciate you guys all taking the time to attend our webinar series. We wanted to keep it short and sweet and to the point, and hope to do future webinars moving forward. I think we've got at least 2 more webinars happening in October, so stay tuned for that. And I really appreciate you guys taking the time. Have a great rest of the day, everyone.